Hello and welcome to the CFO Weekly Newsletter. It is Tuesday, the 9th of March. Thank you very much for joining me. Well, there has been a lot of volatility in the market. There's no doubt about that. Big up days, big down days, and right now, certainly in technology, the NASDAQ, things are looking bearish. If we have a look at the futures market here, it gives us an idea where the cash market will open. You can see right now it is looking fairly bullish. Obviously this can change, still several hours before the market opens. But at this stage, it looks as if the S&P 500, the NASDAQ in particular, and the Russell, all of those looking to open up when the cash market opens. Again, that could change dramatically as we've seen before the market closes. Let's have a bit of a look at the market. We want to be able to study the market because that's what we're trading. We need to understand where the money is flowing and what's going on currently. Well, when we look here at the SPX, we can see right now that we are sort of using that 50-day moving average as a support level. We did drop below it for one day. The next day we closed above it, and now we've pretty much closed right on it. Okay, so we've closed right on this 50-day moving average. This is certainly going to be something to watch. If we do get consecutive days, in other words 2 days in a row closing below the 50-day moving average, that would be a sign we could continue to move lower, potentially down to the 200-day moving average. If we go and have a look at the other major indexes that make up the market, we can see that the Russell 2000 is still above its 50-day moving average. It looks as if it's bounced off that for now. Again, that could change. The NASDAQ, where all the weakness has been, that is well and truly below its 50-day moving average. The 21 EMA has closed below the 50, and that is certainly, in yesterday's session, down almost 3%. A lot of the big tech companies really not doing a whole lot. I mean, if we have a look at something like Amazon, very much within a trading range, is it going to bounce from here? It's below its 200-day moving average. Obviously, that is a sign of weakness, and most fund managers around the world are looking at the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average. They all look at it, and certainly with Amazon, one of the biggest companies that there are, in a very tight consolidation trading range here below the 200, nothing particularly bullish about that. If we look at Facebook, again looking at some of these technology-based companies, again closed below its 200-day moving average, down over 3% last night, within a trading range as well, and not really showing us any strong signs that it wants to do anything of any sort of significance at this point. Netflix, same sort of thing, just closed below its 200 last night as well, in a bit of a trading range there as well, not doing much, not showing really any strength. I think Google was looking a lot better, a lot better than the rest of them, but still, down almost 4% last night. So these big tech companies are not really performing very well right now. Microsoft, another big company, sitting pretty much right on its 50-day moving average, so we'll see whether it gets pretty good support level there at 225. We'll see whether it gets a bounce from there. If we have a look at the workspace, you can see it right there. All of the major indexes are sitting around their 21 EMAs, S&P, the Russell 2000, the transports, and the industrials, all sitting on or above their 21, except for the NASDAQ. We know technology, there's been a lot of selling there, in particular semiconductors. So if we look at semiconductors, which is right there, we can see that has broken its 50-day moving average. So a lot of weakness going on there with semiconductors. Tesla is another one. Now, this is something that I actually called for my members. I said, look, what I see here is a very nice head and shoulders pattern. I would look for this to move down to at least 600. So we saw a very nice head and shoulders, left shoulder, head, right shoulder, beautiful move down to 700. Then we formed a bear flag. We broke out of the bear flag, and now we've moved down to 563. Wouldn't be getting bullish on Tesla right now. I need to see some signs at least getting above 600 for me to be even interested in that, but it's certainly, that looks very bearish as well. So, these are some of the reasons why the market is, struggling a little bit. If we look here at the VIX, the fear gauge of the market, that's crept up to 25 now, and ever since the pandemic sell-off in March, we've remained above 20. So, up again, we will see. But right now, there is a lot of pent-up demand. If these vaccines, and certainly vaccines start to prove that they are effective, there's 90 million people in the United States now that have actually been given the vaccine. So, if it does start to prove itself, we may start to see more and more reopenings, and that pent-up demand with people wanting to travel and shop and do all those types of things could certainly play itself out in the economy. But the other thing you've got to talk about is the bonds. Now, have a look at the bonds. They've just fallen off a cliff. I spoke about this last week. A lot of positive feedback from that, how I broke it down very simply for people to understand what's going on. You now know that when the bonds are moving down, the yields are going up. So this is a bit of a problem here, right? And this is something that the Federal Reserve doesn't want, yields going up. Those two figures that I spoke about, those two very important percentages that I spoke about when we're talking about the treasuries. If we look here at the 5-year, let's get rid of that. We look here at the 5-year, we can see that that's sitting at 0.86. Anything above 0.75 really doesn't bode well for stocks. And then the other one was the 10 that I spoke about, the 10-year Treasury yield, and that's up at 1.59. Really anything above 1.5, and stocks don't tend to like that either. Even the very long dated, say 30-year, for example, yields obviously going up very strongly there as well. So, this is something that the Federal Reserve doesn't want. It has a lot of tools in its arsenal to be able to stop this happening and at least slow it down. It's certainly come out and brushed it off, like it doesn't really have any concerns about it. It's not really something that they're worried about. That could just be a show, of course. We will see. But that's what's causing the markets to be very jittery right now, like we spoke about last week. Combined put-call ratio here, the 10-day moving average, something below 0.75 would be very bearish. We're at 0.85 on the 10-day moving average. That's sort of a neutral reading right now. The SPX put-call ratio, something on this one above 1.75 could show some bearishness. We're in a neutral reading right now. The trend, that's a neutral reading as well. So nothing quite there that's seeing that this market really wants to have a big move down, but it certainly could, right? There's no doubt about that. High yield bonds are something that I watch to see what the market is likely to do. And if I just open that up there a little bit, we can sort of see this rising pattern here, right? Or sort of a wedge, sort of a bit of a rising wedge pattern here. And this is something that if I did see it, certainly it's broke the 50. That was something I was watching. It has broken the 50 now. If it starts to break below this lower trend line here, that's going to be a bit of a concern for me, and I will start to buy put options on the overall indexes if that does happen. Junk bonds, which is a good proxy for the amount of risk that people are looking to take, that's below its 50 as well, something there that you need to be mindful of. And the SPX, looking at that with our opening range, that is bearish right now. Only barely, but it is. Okay, so we've got the high and the low of the first trading day of the month, and we are bearish right now. So there are some certainly concerning signs there, but right now I don't quite see the market selling off hard, although it could happen in a heartbeat. That high yield bond, this is something you need to look out for. High yield bonds, here it is here. Keep an eye on, where is it? There. Keep an eye on this. Okay, if it does start to break below that sort of 85 level, we will start to load up with bearish positions. How did we create millionaires in 2020? Because with the exact things I'm showing you now were what we were watching back then. So if that does happen, we will start strategically buying put options to make incredible money if the markets do have a large fall like they did last time. So that's something we are watching. We are getting a rotation out of growth stocks into value stocks. Sean, what's one way I can see that? Well, VTV is one way of seeing value stocks, and you can see they're moving up very strongly right now. And then if we look at growth stocks, which is, I got that wrong, VUG, growth stocks, you can see they're starting to move down. So, a bit of a rotation there with growth stocks, and people getting out of growth stocks. What is a growth stock, Sean? It's it's a company that is likely or anticipated to grow at a very significant rate, right? Its growth rate will be above average for the market. That's one way of saying it. It's a company that reinvests its earnings so it can accelerate its growth short term, would be considered a growth stock. Whereas a value stock is, something with a low PE, a low book value, for example, something that's a really solid company that's undervalued. But there is a rotation right now into value stocks as we speak. So that's really what's happening with the overall market. Some of the areas that you might want to focus on for income, certainly oil has been moving up, and if we look at USO, we can see that that is in a strong uptrend now, using the 21 EMA as a support level. And some of the things that we've been doing very successfully, one of the trades that we were in, just to try and give you guys some more value here, was CVX. We've done very well with CVX. Beautiful move to the upside, looking to take some profits on that now, well over a 32% return in a week. So that one has worked out very well. But if you're looking for Sean, what type of things should I look for if I'm looking to make money with something to the downside? Let's say that the high yield bonds, HYG, does break that trend line that you just have just shown us, and we do start to see some weakness in the market. What are some of the things, or what are some of the stocks that I should look at as examples to potentially profit with put options on the downside? Well, something like this. This is one that we did that was very successful, where you want to look for things like this. You want to look for patterns, right? Patterns are very important, and this one had a beautiful head and shoulders pattern here, as I'm drawing for you. And what you would want to see with something that has a nice pattern here, the overall market is starting to turn bearish. How can I find something that's going to sell off more than most? Well, something that breaks a significant level, right? Something that breaks a significant moving average, for example, like the 50, the 200. So this one, head and shoulders pattern, broke the 50 right here on this day, entering here. Beautiful move to the downside, right? That was a fantastic trade. But those types of things are what you need to be watching. Oil, right? You could look to make some money with oil on the upside. I mean, a couple of the stocks that I would look at with oil are stocks that are certainly, I still think there's more room for oil to move higher. So you could come to, say, FinViz, for example, right? You could click on Screener, and you come over here and you click on all, right? Now, this is just an idea to try and give you guys some more value, to give you a bit of an idea about how you might possibly do this. You want to be looking for something that is a quality stock that is undervalued, okay, that hasn't already had the big move up like a lot of oil stocks have. Something that's quality, maybe with a price to book ratio under 2. Okay, for example, Sean, what's a price to book value ratio? Well, something under 2 or under 1 typically shows a very solid investment. The book value, what's a simple way of explaining that? It's the assets of the company that are carried on the balance sheet, right? Minus any accumulated depreciation. Okay. You could think of it as the tangible net value of the assets of the company minus intangible assets like patents or goodwills, and obviously liabilities. Okay, so you're looking at how much money am I paying for the stock compared to what it's actually worth, right? If I sold all the assets, take away all the liabilities and the intangibles, what's it actually worth? If I just sold the actual tangible assets, what's it worth compared to the price of the stock per share? If it's 2 or especially under 1, that's showing you it is undervalued. That's one way of doing it. There's a lot of different ways of doing it. Probably just going to the energy sector. Okay, energy sector, you'd be looking for something that pays a dividend, which would be good, right? So dividend yield, say over 2%, for example. I want something with some liquidity in it, so I want it over 300,000 as average daily volume. Country in the United States, something like that. Right now, for me, I'm an options trader, so I want it to be optional. I typically like it optionable and shortable. It brings you down to a list of, say, well, there it is, 31 potential candidates there that you could look at. Okay, so this is a way that you could do this. Now, what I would do from there, I would come and click on basic. Right, click on basic, and what that does is it brings up the chart here, brings up the the different metrics for that company, the different fundamentals that company has. And I'm looking, what am I looking for here? Well, I've already put in the criteria, so I don't really need to look at anything here too much. There is one thing which I'll show you, but really what I'm looking for is a breakout, a charting pattern, something like that sort of sticks out to me. Yeah, that one looks interesting. Yeah, not so much. Haven't really broken out too much yet. Could be an inverse head and shoulders happening there. Okay, that one's, yeah, okay, so BRY just broken out here. Okay, just broken out here from that trend line and this trend line here. Got insider transactions positive by 205%. So a lot of insiders that work for the company are buying up this stock. Price to book under 1. Okay, so it's definitely undervalued. It's in that oil and gas, which is where we want to be, because we think that there's still room for that to continue to move up. So that's definitely an idea, right? And I would just flick through those to just CVX, which we've already made great money from. Okay, price to book 1.59. Okay, yeah, so I would go through like that, and then I would simply just go through these and see if I could see a charting pattern setting up, something that's breaking out, something like that. Now this one here has a charting pattern, right? We've got big move up, sideways consolidation. So this is a bull flag here, waiting to possibly break out. So sort of break above that upper trend line there, say 850 for example. Break above that, we could certainly see this one move. So something like that. Okay, so that's an idea. Okay, for you to be able to find some potential ideas to make money with. Here's one that we looked at that's done very, very nicely. But that's sort of where I'm focusing my ideas right now. I am still continuing to look at the yields. That there's no doubt about that. Another one that I'm looking at, just to try and add more value to all my subscribers here on the newsletter, is Tractor Supply. So Tractor Supply, I do like this one to the upside. It's been using the 50-day moving average recently as support. I think this one could continue to move higher, and I certainly do like the look of Tractor Supply. Probably have a first target of the prior high here. Okay, about 173 would be my first target. I think if it gets above that, it could have a pretty significant move from there, right? So certainly looking at that one. What I'm doing with that one is setting up a very conservative bull call debit spread on that, being very conservative because of where the market is right now, but there's certainly some of the areas where we have made some money, and there's some of the things that I'm focusing on going forward. So just gold, just a few people are asking me about gold. Nothing really striking me with gold right now. We're in a downtrend. We then moved down. We broke this significant support level just yesterday. So nothing with gold right now. And when I do get into gold, at some point it's probably going to trigger. What is gold? It's really it's a hedge against inflation, but it's a hedge against negative real yields. That's really what it is, right? So when you start to get inflation moving up, getting above the coupon payment you get for holding a bond, nominal rates, that's really where gold shines. So, not seeing that right now, and broken that significant support level there. Nothing there grabbing me right now. But if it does, I'll look for quality gold miners and I'll look to cash flow those and even play some directional trades on there as well, but nothing that's going to grab me right now. I am interviewing Jim Rickards tomorrow morning, actually, right? I'm interviewing Jim Rickards, which should be very interesting. If you wanted to watch that, let me know, and send an email to support@cashflowoptions.com.au, and we will certainly send you a copy of that. But it should be a very interesting interview. Someone who knows gold better than most people on the planet, actually, and he's a very educated man. I'm looking forward to interviewing him tomorrow. So that should be interesting. I hope you enjoyed this. I'm about to show my members some new trades that we're about to get into, and obviously managing our existing positions. I hope you guys enjoyed the newsletter. If you did, you enjoyed the content, send a email please to support@cashflowoptions.com.au. Say, Sean, I enjoyed the newsletter, I got something out of it, continue to do it, and I will. All right, my friends, thank you so much for listening. My name's Sean Allison. All the best, and bye for now.